I'm going to give you the missing link that's not only going to improve your execution, but give you more confidence in your trading strategy. Watch till the end of the video as I'm going to go over everything when it comes to choosing the right trades, executions, and how I scale into my trades that yields me insane profits catching the daily range. Before we begin, make sure you guys are following me on Instagram at Arkhamtrades and click the link in my bio for my free training and free ebook. Thank you. The candle we're going to break down is the rejection wick. You may be asking, how is this candlestick going to help me become a better trader? Well, it's not what the candlestick looks like on the outside, but it's actually what happens on the inside. This is what I call candlestick anatomy. Understand that every individual candlestick on a higher time frame is built from a lower time frame structure. So in this depiction, you can see here that one singular candle from a lower time frame point of view is a power of 3, where we have the opening, the low, the high, and the close. Then you can see here on this one singular candle is a lower time frame power of 3, where we have the opening, the high, the low, and the close. Now what we can do here is use the candlestick anatomy with our points of interest. As you can see here in these two examples, we have a bullish and bearish point of interest. This can be a fair value gap, order block, rejection block, whatever, right, etc. Following tapping into that level, we see a rejection from it, establishing the low before we ultimately start to push higher from that bottom. We see here in the bearish point of interest where we see that initial push higher, tapping into that level, following the rejection from it, and then we see that push to the downside, establishing this high here as the structural high on the higher time frame. And on the lower time frame, we can see here we have that power of 3. So we have that opening price coming higher, tapping into that point of interest, obviously seeing a rejection from it to then create that close. Obviously, this point of interest has to be in alignment with the same time frame that we anticipate a rejection wick. Let's talk further. Let's say we have a 15-minute order block. On the 15-minute time frame, we want to look for the rejection wick signature as price taps into that 15-minute level. See how the point of interest is in alignment with the rejection wick signature that we're looking for. So once the 15-minute candlestick closes inside of that point of interest with that rejection wick, that is our confirmation on the lower time frames that we've established a power of 3, where we had that opening price coming higher, price tapping into that point of interest, could not push any higher. Sellers were then met to then see this push to downside. And then what happens after a manipulation forms? Well, it's the distribution. So after getting that lower time frame power of 3 tapping into our point of interest, we can immediately take a short here following the next candlestick open with our stop loss back above the point of interest for that overall distribution to the downside. As we can see here in this bullish example, we have this 15-minute bullish fair value gap. We see here this 15-minute candlestick comes down into that 15-minute bullish fair value gap, giving that rejection wick signature following this push to the upside. So as the next candlestick opens up, either at the opening or at the low price, we can take the longs here, stop loss just back below the point of interest, anticipating that distribution to the upside. So this one trick alone, waiting for that rejection wick as a form of confirmation in your points of interest, removes the worry or doubt and helps you become a more confident trader. Now let's get into the charts and see this in action. Before we continue, if you guys are looking to join my private mentorship, this gives you benefits like live trading, pre-market analysis, and post-market analysis with me every single day, as well as access to my Market Maker series and Market Maker Mastery course with full in-depth guides on everything when it comes to ICT and SMC, shared nowhere else. That's going to be the first link in the description if you guys wish to join. Back to the video. For first example here, we're looking at NASDAQ on the 5-minute time frame, and some key things that we can take note of is obviously seeing how the marketplace is breaking structure to the upside, right? We're seeing clearly break a structure to the upside, finding support at support levels, right, inside this bullish fair value gap, seeing that bounce higher, tapping into this bullish order block, seeing that push higher, and then we have this bullish order block right here, right, as a level support. Right, if we anchor our dealing range from low to high, we can identify this bullish order block as a level of support to where we can anticipate the marketplace to come down into for that continuation to the upside. Right, to our left here, we can also identify areas of liquidity as a draw on liquidity that we could see the marketplace come up into. This is what we do when we're looking for a trade idea, right? We identify the order flow of the marketplace. Are we in a market maker buy or a market maker sell model? right? That's simply just identifying the order flow, right? When we're in the market maker buy model, I should be respecting previous PD arrays as we reach up into a level of liquidity or inefficiency, right? A drawn liquidity. So we're anticipating price to come back lower into this level because from the dealing range low to the dealing range high, right, this is a level of discount, right? We want to be buying inside of a discount, right? Just like how we bought inside of discount here, as price tapped into this fair value gap after taking these lows. We see that push higher, retracement, push higher. Now we're anticipating that retracement for that continuation to the upside. So I'm going to play this here and see what happens as we tap into that level. Boom, and just like so, we get our rejection wick, right? The marketplace opened up. We seen that drop to the downside, tapping into looks like the opening of this order block level. We tapped into the opening of that order block level. Following tapping into the opening, we saw that push to the upside, creating that high and then eventually the close, right? This is the power of three with the open to the low to the high, now to the close, right? This is a very bullish signature inside the marketplace. So now what I'm going to do, identifying the power of three on the 5-minute time frame. Now I'm going to take my trade idea as the next candlestick opens up. Stop loss below the previous low because I identify this as a structural low, targeting back above these highs for a 2-to-1 R. All right, let's see how this trade then plays out as we go forward. As we can see here, we have another rejection wick where price opened up, saw that drop lower. Obviously, it did not take the previous low. That's especially what we want to see. So now what we can actually do here is we can actually scale into our trade idea and move our stop loss a little higher back above that low, targeting same target for a 2-to-1 R. So instead of making a 2-to-1 R on this trade, we end up making a 3-to-1 R because we identified the right signatures to know that we're in the confirmation trade, right? We have confirmation that this trade idea is going higher now based off of this one signature, so I can actually scale into my trades and make more off of my winning trades, right? The goal in trading is to make more when you're on the right side of the marketplace and keep your losses small. Let's continue playing and see how this plays out. Then we eventually reached up higher, taking profits at the old highs for over a 3-to-1 R, right? Initially it was a 2-to-1 R, but we eventually scaled into our position. Once we got that reconfirmation, very solid trade. On to the next idea. We're looking at another trade idea here on the NASDAQ. We just take out this liquidity pool. We had this last up close candle. Following that last up close candle, we had this change in state of delivery, which is this bearish engulfing candle, closing below this bullish engulfing candlestick. So this is that change in state of delivery after taking out a prominent high, which is this prior daily high. So right now, just based off of this information, I'm anticipating the marketplace was in a market maker buy model to reach up into this level of liquidity. Following taking out that liquidity, we're seeing that change in state of delivery, and this right here at these highs is our indication that we could see a smart money reversal. Essentially a point where we have been going higher, we reach a breaking point to where we can't go higher anymore, and now the marketplace must go lower. But we can also identify that there is liquidity below us, like this liquidity pool, as well as this low, and even lower below us, we also have these areas of liquidity below us. So this last up close candle then becomes our bearish order block, and if we can see that rejection wick as price taps into this bearish order block, that would be a very good setup anticipating lower prices. Let's see how this then plays out. And right here we have that rejection wick where we had that open, high, low, and then close, right? We opened up, we reached higher into this order block level, price could not go any further, and then obviously we came back down to the open and then eventually established the low before coming back into the close. So I'm going to put my short here as the next candlestick opens up, put my stop loss just above here in this order block, right, keeping myself safe, and then we can target below these lows for over a 2-to-1 R. Let's see how this trade idea then plays out. Price then taps us in, right? We get that same signature once again, right? Obviously this being the structural high, and as you can see here, price comes near that high, very close to the high, but obviously doesn't take it out. Really good signature that I want to look for inside the marketplace, right? These are strong highs inside the marketplace, where the marketplace is failing to take out these prominent highs. So that's a really good signature. So on the next candle opening here, I'm gonna scale into my position and put my stop loss just back above this high. Take profit remained the same down here. Now instead of getting a 2 to 1 R, I get a 3 to 1 R, right? Because I had that confirmation. Let's continue. Boom. We scaled into our position and price immediately sees a drop lower. All right, on to the next trade idea. On our next trade idea, we're looking at the Dow Jones, and we can obviously see many fair value gaps down here as we're reaching lower and lower prices. So when we're in this situation to where we have multiple inefficiencies in one area, we obviously want to grab out our dealing range, right, and identify that 50% level, and we can identify this middle fair value gap as a high probability fair value gap that the marketplace could reach back up into before seeing that continuation to the downside. So now let's go down to the 15-minute time frame. We're down on the 15-minute time frame, and obviously we can identify that 1 hour bearish fair value gap as well as this 15-minute bearish fair value gap inside of it. So obviously this 15-minute bearish fair value gap inside of this 1 hour bearish fair value gap is a nested fair value gap. So this area alone is a strong resistance level. So if we can see the marketplace reach back up into this level, it can be a high probability short for a continuation to the downside. Let's go down to the M5 because the New York session is just about to open up, right? And next couple of minutes, New York session is about to open up. Let's see how this plays out. We see that reach higher. And just like so, we get that rejection wick. Obviously, we had that power 3 where we seen that open, high, low, and then close, right? We seen that opening price, it reached up higher, tapping into that 15-minute bearish fair value gap, which also have this 5-minute fair value gap here, right? Price could not go any higher. So as soon as it reached up into this bearish resistance level, it could not go any higher. So that is a very good confirmation inside the marketplace. So I'm gonna take my short right here as the next candlestick opens up. Stop loss just above this wick high, targeting back below these lows here for over a 2 to 1 R. All right, let's see how this trade idea then plays out and see if we can get a scale in if we get any other signatures. All right, very quick, very easy here. We had that drop lower. We did create this bearish fair value gap here, which we did eventually tap into. Following tapping into that fair value gap, we did see this drop to the downside, back down into this liquidity pool for over a 2 to 1 R. Very good trade idea, very good confirmation, and overall coming down into our take profit. So that's gonna be it for the video. If you guys want to support me further, make sure you guys hit that like, subscribe, and comment what you guys want to see next or how you enjoyed the video. I'm Arkham. Be safe.